Pick your buy from here, the demarcation, and put your stop loss just below. If because of spread, you can put it like 4 pips below or 5 pips below, just to be safe from spread below that candle that you picked your entry from, that other block candle. So this is the bullish order block for taking buys, and then this is the bearish order block for taking sells. So that's just it. So this is how it looks like. And then some people also ask, what about when there are candle wicks, wicks, candle wicks? How do you pick your entry when there are candle wicks? So this is how you pick your entry when there are candle wicks. So for when there are candle wicks, this is what I mean by candle wicks. This when the other blocks have wicks, how do you pick your entry? For example, if there was a wick here, let's say this is the wick here, yeah, something like this, and then this particular one has this kind of wick. This is the candle, then this is the wick. How do you pick your entry for this kind of trade? So pay attention. If the wick of the other block is smaller and shorter than the body of the other block, you pick your entry from the wick. But if the wick of the other block is longer than the body, pick your entry from the body. So this is, for example, this particular other block, the wick is actually shorter than the body of this other block. So if you're picking your entry, you pick your entry from the wick of the other block right here. But in this scenario, this wick of this other block is way longer than the body of this other block. So if you're picking your entry, you pick your entry from the body of this other block right here. So, but in a scenario when there are like three consecutive candles like this, there are scenarios like this actually. You see one candle like this, you see another one, and then you see a third one this long. If you're picking an entry for this one, just put your entry here. You get here. But I'm just searching for just two candle other blocks. So if the wick of the other block is shorter than the body of the other block, you pick your entry from the wick of the other block. But if the wick of the other block is longer than the body, you pick your entry from the body of the other block right here. So I've talked about my market structure shift. That is the indication that price is about to change direction to the opposite side. Break of structure, when there's a key level in market that gets broken, why market remains in this current trend. I've talked about what my liquidity is. That is my inducement. That is the first value pullback the market makes after a market structure shift or a break of structure. And I've talked about my point of interest. I've said I use other blocks and breaker blocks. I said that an order block is a zone in the market where there are a lot of institutional limits orders. And I've said there are two types of order blocks. There's a bullish order block and then there's a bearish order block. Bullish order block for when you're looking for buys, bearish order block for when you're looking for sales. I've talked about how to pick your order blocks, and I talked about how to pick it when there are candle wicks. Now we start to implement charts. So let me go to one set of that. So when I analyzed this setup, this is what I did. So I think I used the 30 minutes time frame for this setup. I used 30 minutes time frame for this setup. So I paid attention to this chart and I noticed that market was previously on an uptrend. So this is the uptrend that market was on before. Here, this was the uptrend. The market was making a series of higher highs and higher lows. So you can see from here, higher highs and higher lows, 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 higher highs. The market now made a lower low right here. So this was where there was a market structure. Remember, I said the market structure, market will change uptrend to the opposite direction. So this was previously an uptrend, and market changed direction to the downside, meaning that we're no longer looking for buys in this setup, we're now looking for sell. So we have gotten our market proceed from this previous uptrend and market from there. It was making a series of higher highs and higher lows before. It now made a lower low, now changing the direction of this trend from an uptrend to a downtrend. So after I've gotten my structure part of it, what is next I look out for? Remember I said market structure, liquidity, and I said that after I've gotten my structure part, which is the market structure, what is next I look out for? My liquidity. What do I say is my liquidity? Inducement. Now, what is my inducement? The first valid pullback that market makes after a market structure shift or after a structure. So we have gotten the market structure shift, meaning that the next thing we'll now look out for is our inducement. So the first valid pullback that market makes after that shift is here. So I'll mark it out. And for other people that will say is here, no problem. Mark yours out from here too, if you want to. But these candles actually went above these zones. So, and it did not touch my point of interest. So if you want to mark it here, mark it here. I've seen questions from people that I have to cover it here, so they will not come and start asking me that question again. If you want to mark here, no problem, mark here. So mark this as an inducement. But as long as these candles have actually gone above those inducements, I want to mark this as my inducement because it still did not touch my point of interest. So if you want to mark it, no problem. But this is what I marked as my inducement. This is the first valid pullback that market made after the shift in market structure. Because yeah, this one there was a pullback here and they pushed market down. But when market came up here, it actually pushed this market lower than the last one that market pushed this one down to. So I'm using this as my inducement. It is more valid. So this is my inducement right here. So I've gotten my market structure shift. I've gotten my liquidity, which is my inducement. Now it's time to now go for the point of interest. So the one I've taught you guys is the order block. So that was why I set up this trade to be the one that will take with an order block. So I've gotten my market. It's just three things. This structure is very, very simple. The only thing you're looking at for is just three things. Where is my market structure shift or my break of structure? What is my liquidity? That is my inducement. And what is my point of interest? I see my market structure shift. I see my inducement. Let's now look at point of interest. So now there are two types of order blocks. There is the bullish order blocks and there's the bearish order block. Now, bullish order block for when you're looking for buys, bearish order block for when you're looking for sales. So what are we looking for in this trade? We're looking for sales. So we'll now start looking for the bearish order block. And for you can see, this is what the bearish order block is. So I'll mark this order block as my entry. So this is where I'll be taking my sell position from. And I'll keep my stop loss just above that candle. What happened? The market eventually came, swept this inducement that I said was a trap. Because market people, many people will now be entering this trade from this zone, saying that is the resistance zone. That when market comes here, it bounces back, no problem, bounces back. You take your trade from here, market will take you out and trigger the other block, the main point of interest, and then sell. This was I think NFP news. And let me see if I have the before of this analysis. And this was the before of the analysis. This was the trade. Higher there was a structure sheet here, inducement, order block. Simple. I didn't even spend up to 5 minutes, and I didn't spend up to 3 minutes analyzing this chart. I just opened up this chart and saw this and marked it out immediately, and I left. It doesn't take, once you can spot, you don't have to stay hours looking at the market or looking at the chart. Once you open it and you can see the setup, you will see it. You don't have to force the setup. It presents itself. Once I come to the chart and I look at this and I see this already happening in the market, only thing I have to do is just mark out who my structure shift is, mark out who my inducement is, and then mark out who my point of interest is. Once I've marked it out, I will just set, either I wait for market to now trigger it, or I set limit entry and I start watching my chart. But it does not take time. You don't have to spend hours saying that you're analyzing a pair. What are you analyzing on the pair? Once the setup that you trade shows itself, you're going to see it and you're going to trade it. Whatever you're now doing on the chart is just you staying there to deceive yourself and force entries on yourself, because once you see your setup, you know. So once I come to chance and I see this already, I've already seen what I'm looking at, and I'll mark it out and I'll wait for it. So I spent up to 3 minutes analyzing this chart. So this was the before of analysis, and then this was after. It was NFP news. So it is this particular trade right here. Market structure sheet, inducement, point of interest. So market structure, the point of interest. So for our market structure sheet is what our market structure is. So market structure. This is liquidity, and then point of interest. We can see the three parts of